Hey, good morning. It's Saturday, the 4th of June. If you're watching this later on in the day, I'm going to keep replaying this webinar, then good afternoon. Right, I'm Jason Sen. If you don't know me, I have been trading financial markets since 1987, 35 years getting on for now. I am a very old man, but I do have an awful lot of experience. I started doing technical analysis about 15, 20 years ago. Just really started learning before the global financial crisis. And then I set up a service providing trade ideas and signals, technical-based trade ideas and signals. Back then, actually predicted the crash of 2008, just because of the very clear head and shoulders patterns that were developing on the stock markets. So I've been around a long time, and hopefully I've got a lot that I can teach you. If you're new to the game, then I can definitely help you because I've made every mistake under the sun, and I can help you avoid those mistakes. If you're a little bit more experienced, or you may even be a subscriber, then you'll already know that I can help you with the signals that I provide on a daily basis. But I also provide education, and as I say, I've made every mistake under the sun, so I think that qualifies me to be quite a good teacher. Okay, get on with today. So the plan for today's webinar is do my usual analysis. Now, if you follow my YouTube channel, then you'll be kind of used to what I do. I break down the markets with my technicals, try and spot some trade ideas. I'm going to go into a little bit more detail today, though, kind of show you how my strategy works, how my technical analysis works, my techniques, and then try and identify maybe some trade ideas, look at where my stop would be, where my target would be, and why. And these are trade ideas that you can try and use at the beginning of next week if you fancy it, if you think that they're good ideas, maybe if they tie in nicely with your analysis. I'm going to start by looking at gold, oil, move on to some Forex pairs, dollar and yen pairs, and then I'm going to finish up with some stock markets and some crypto. So probably going to take about 30 minutes. I'll move quite quickly, but you can always pause this, go back over it, watch it again. But I want to try and get as much information into half an hour as I possibly can. At the end, I'm going to offer some things that I've never offered before. Some big deals on education. I'm going to offer you the chance to have a chat with me for 15 minutes for free, no charge. So I can try and help you with any trading issues that you're going through, either technical analysis or just trade execution, account management, trade management, that kind of thing. So I've never done this before. I'm quite excited. I'm trying to do some new stuff for you guys and see if it can work. So please do stick around to the end. I think it'll be well worth your while. As I say, I'm going to aim for about 30 minutes. Let's crack on. Okay, gold is one of my favorite markets. I do like to look for trade opportunities in gold. Sometimes that's quite easy. Gold is quite a good market technically. Sometimes it's not so easy. And actually, I'm going to be focusing mostly on the hourly chart today. We'll have a look at the daily chart. I might flick to the 4-hour chart. I'm doing that because I'm going to be looking short term over the next sort of, when the market's open from Sunday night. I'm going to be looking with a 24 to 48 hour perspective. So I'm not going to bother with the weekly chart or the monthly chart, although I do keep an eye on those, and you should too. Even if you're a short-term trader, just keep an eye on that, at least a weekly chart. You want to be aware if we're about to hit, if the market's falling, for example, and we're about to hit the 500-week moving average, the daily chart might look really weak, the 4-hour chart might look really weak, but there might be the big funds out there are saying, right, this is where we're going to start buying because the 500-week moving average is being hit, and we think that's a good support level. So, you've got to be aware of this. With gold, it's worth looking at the daily chart. Actually, I will show you the weekly chart for gold as well. But you can see that this is what's making it tricky. We've been very volatile, but we keep returning to old levels, and this is causing the daily moving averages to flatten out. Now, the 500 and the 200-day moving average are converging in what is becoming a bit of a support level. It was a resistance level on the way up, 1850, 1840. Now, if I just open this up a little bit. There we go. That's what I'm trying to do. We've got I need to show you this trend line as well. So the trend line goes all the way back to, there we go. Where is this down here? This low was seen around August 2021. So it's getting on for what, 9 months? That's a 9-month trend line coinciding with the 200 and the 500-day moving average. I've got the green as the 5, the red as the 200. Now, you can't quite see that from the daily chart, but those levels were working well as support. We had a breakdown during the beginning of the week, and I thought, right, that's it. Gold's now going to plunge. But then I was completely fooled, and the market rocketed back up. And now we are finding support around 1850, 1840. even though this is why it's tricky. I don't like markets that are up one day, down the next. And we went up, down a little bit, and then we had a couple of dojis where we didn't really go anywhere, then we went down, then we're back up again, straight back through that what I thought was resistance from the trend line and the moving averages, and then we rocketed. So I thought, right, that's it. We're going off to my next target, which is basically 1890, and of course Friday we've reversed. This is a very frustrating pattern for me. There's no momentum. You certainly can't run a trade for more than 24 hours because clearly the market is reversing. So not the kind of conditions that I'm looking for gold, but still I'm going to try and break it down because a lot of you do like to trade gold and I want to try and do my best for you. So clearly we are in a sideways pattern, and the only way to look at it when we're doing this in the short term is the hourly chart. Even the hourly moving average, even the hourly moving averages are converging and moving sideways. So it really does show you how in all time periods gold really is trading sideways. Now, the 500-hour moving average has turned out to be a good support level, and that is around my 1850, 1845 support level, as I mentioned from the daily chart. So that ties in quite nicely. So according to my daily chart and to my hourly chart, gold will need to break below 1840 for a more negative perspective. But really, I'd be looking for it to break below this trend line, which is around 1832, because we spiked down through 1840 last week, hit 1828 and then rocketed above. So I'm gonna have to see a break of this trend line on the hourly chart, as I say, around 1832 before I get really negative on gold this week. Until that happens, I'm bullish as long as we hold above 1850, 1845. Those levels coincide quite nicely with the daily chart, so I'm happy with that. Then we can start pushing back up to 1870, 1875. But if you look at the daily chart, I think ultimately gold could get to 1890, 1895. I need to put some Fibonacci levels on there. That will also show you why I've chosen that level. There's my fibs. This is the swing high to the swing low. Now, forget these fib levels on the left side. They're longer term. I'm just looking at these shorter term fib levels now, and the 100-day moving average and the 500-day moving average are both converging at around 1890. I've got the 38.2% fib at 1895. So that 1890, 1895 area looks quite key to me. And when you look at these spike lows, 1890, what was this one? 1890, and this one down here, 1894. So these also, the price action from March and up until the end of May also shows you there were buyers coming in at that level. Will there be sellers coming in when we retest that level on the bounce? So this is absolutely key for me today. Well, for the beginning of the week. 1890, 1895 is the resistance level, and I think we will get there eventually as long as we hold above 1850, 1840. Now, as I've said, if you're buying around 1850, 1840, I'd have a stop below 1832, maybe 1830. You're getting in across the 10-point range, you've got another 10-point stop. I think that's worth it, because if we do manage, even if we just get back up to 1870, we're still looking at 20 to 25 points on the upside compared to 10 or 15 points on the downside. I think that risk reward is probably worth taking. Now, if you're really lucky, maybe you get out of half your position when we hit 1870, 1875. And if you think that we could get as far as 1890, 1895, you can run the other half of the position. And if you're really lucky, we'll get up there. So those are my best trade ideas for gold this week. Shorting at 1890, 1895, I think it's worth it. I would suggest a stop above this spike high from May, which is at 1910. That gives you quite a wide stop, wider than I would really want, to be fair. Maybe 1905 will be enough, but if we break above 1910, then I would suggest that gold is going to continue higher. Now, I'll probably look at that next week on my YouTube channel, but that's enough for gold for now. Moving straight on, I wasn't going to cover crude oil because the chart is horrible, but then I'd be doing you a disservice. So I really think I should give it a go no matter what. Now, oil, I'm only looking at it from really sort of March, and as you can see, mostly sideways. There's an equal splattering of green and red candles. So if this is what's so tricky for me. Let's say this low is down at 92.93. Now, down at 92.93, if I said to you, hey, oil is absolutely, definitely going up to 119.98. So let me just check. That was down at 92.90. Okay, so oil's going to go up 115 points more over the next 2 months, less than 2 months, in fact. So it's going to be easy money to buy oil. If I'm wrong, keep a trailing stop in, but I'm absolutely convinced that that's going to happen. But anyway, buy oil, keep a trailing stop in, just in case I'm wrong and the market pulls back. You want to preserve some of your profit. But I think that's what's going to happen. Now, if I'd said that to you, it would have been almost impossible for you to actually make money, because oil rocketed from 92.93 up to a 109.81. So that's, well, let's call that 17 points. Then it pulled all the way back to 95.28. So 95.28, that's about just over 2 points above the previous low. Any trailing stop there, you'd have been taken out. And then, of course, we managed to just get through the previous peak. So here you'd be thinking, okay, this is good. We've beaten the previous peak. Jason's going to be right. We're going to go up to the 119 area, and then we reverse and we come down and we bottom out just above the previous low. This is really horrible. Eventually, we push a little bit higher to 115.50. Again, big pullback to 105, 10-point pullback. Finally, we get up to 119.98. Now, maybe you're a better trader than me, but there's absolutely no way that I would have made money on that move. I'll be honest with you. I would have been stopped out left, right and center. And by the time we got here, I would have just given up completely and then missed the move up to 119.00. So what does that mean for where we go now? I think we have to be prepared for that kind of pattern. I don't know whether that pattern will continue, but certainly there seems to be quite a battle between bulls and bears. Bulls are winning overall, but the bears are certainly making it very difficult for them. And this is one of the reasons why I can't really come up with a good trade idea for oil. You know, put your trend lines in there, put your fibs on there. I can see that if we were to pull back, here we go, then I've already put my fib levels in. I've taken it from that 95.28 swing low up until Friday's swing high up at 120.46. Now, we closed at the high of the day. We closed at the high of the week. We've beaten the previous week's high and closed above it. So that would suggest to me that oil will actually continue higher. Maybe if we break above 120.50, you might want to go with that move and see how far it goes. But if we do pull back, I wouldn't even really be touching it until we get to 115.00, 114.00. That to me looks like a very safe area to try along, but there's just too much congestion back and forth, anywhere in between that 5-point range, where for me, I'd rather just go to another market and try and find some better trade ideas. I've got some of these horizontal white lines that go all the way back to, oops, I think I actually need to show this on the monthly chart. There we go. These horizontal lines go back to some price points, and they're acting as targets for oil, but I'm not going to go into that because I can't really come up with any tremendous trade ideas. Right, back to the daily chart for oil. Okay, I'm going to now look at the dollar index. I don't normally follow the dollar index that closely, but it's becoming, I do keep an eye on it. It's coming particularly useful lately because the dollar index has been holding the fib levels beautifully. Now, hold on a sec. Right, let me just scrunch this chart up so you can see what I'm talking about. Actually, let's put it on the weekly chart because I just want to cover the move that we saw for the dollar. Where did this start now? This started, okay, the last week of May last year. So this is an exact 1 year chart from this point here. And you can see, nice run up for the dollar, very nice. Punctuated with the odd bull flag as bull runs are, but pretty much all the way up. Nice little bull flag here, and then bang, we're up to 105.00 in the dollar index. Then we pulled back. So this is where I start to throw on my fibs to see where we could get a support level. Now, if you've been following me on YouTube, I've been talking about this level for a while, a couple of weeks. So the 101.50, 101.25 support level, and that's held beautifully. Now, I went into quite a lot of detail on this during the week, so if you missed it, I suggested that we would bounce up to there, bounce from that 101.50, 101.25 area up to 102.60, 102.80, and I suggested we might actually hold within there. I think some of these markets, I'm talking stock markets, dollar pairs, maybe yen pairs, and even gold, are going to be trading sideways through June, maybe July. There's a fundamental reason I have for that. The markets have been incredibly volatile, obviously, for the first 5 months of the year. We've had the Russian invasion of Ukraine kicking things off, affecting commodity prices, changing the outlooks for the economy. We've had geopolitical issues there as well, of course, with China not getting involved. All of this has an influence on stock markets, currency markets, commodity markets. The stock markets, therefore, have been volatile. I think they would have been volatile anyway, because we already had an inflation issue. It was just exacerbated by the Russian invasion of the Ukraine. The Fed clearly behind the curve. All of this year, in fact, most of last year, I was talking about how the Fed are behind the curve. They just weren't taking inflation seriously. Inflation was going to take off. It did. So the stock markets were bound to be volatile. The stock markets were bound to go down. Interest rates had to go up. And now that the Fed are behind the curve, inflation rates inflation is probably going to go further than it needed to have done. Interest rates are probably going to go higher than they should have done. Now, what I'm trying to say is the 5-month period of extreme volatility right up until the end of May, I think it's going to come to an end. And I talked about this to my subscribers and my YouTube followers at the beginning of last week. I said, I think we're in for a period of stability just because it's been so volatile. Markets do eventually stabilize. They won't remain enormously volatile unless there's new impetus, something new happens in the war, or a big change in inflation, or a big change in the Fed's outlook for interest rates, or forward guidance, whatever you want to call it, or something happens completely unexpected. Markets will stabilize. They will find a level where buyers and sellers can interact with each other and form and find a level where basically the market can trade, where volume can trade. That's the whole point of financial markets. That's what they try to do. They look for areas where volume can take place, and I think that's what they've done now. So June, maybe July. Obviously, it's difficult for me to tell. I don't know what's going to happen in the world, but I think that the markets will stabilize. And already this week, I've been proved right. And this is what you want to watch for now. This range for the dollar index. If you're trading dollar pairs, keep an eye on the dollar index. It will give you some good ideas of when the markets, of when the Forex pairs that you're trading can turn. So that's enough of that. I'll just bring the hourly chart down just to see if there's anything worth noting. Well, you can see on the hourly chart how beautifully it's even more clear how the dollar index is holding in between those points on my fib levels. And even the moving averages now, they're converging. They're appearing to flatline. At least the 200 and the 100 are doing that. The 500 is even flattening out. So my theory is that will continue. How does that translate into some of the Forex pairs if you're actually trading, for example, the Aussie dollar? Now, the Aussie versus the US, a bit tricky. This has overrun some levels, which made it slightly difficult for me. That's the weekly chart, which I don't want. I want the daily chart. Here we go. Now, the market overran what appeared to be good resistance around the 50% area. We got through the 200-day moving average. Now, I think that we're going to establish a range there. So I'm going to suggest that last week's high around 72.82 is going to be the high of the range for a while. And I've thrown some fib levels on my chart. Now you can see we're in a bull trend in the short term anyway through May. So this will be important for Monday. The 100-period moving average, the 100-hour moving average is at around 72.00. We've got the trend line at 71.95. So I'm going to call it 72.00. 71.90 is my support area off the bat on Monday or Sunday night even. Now, if that holds, we can return up to the sort of 72.60, 72.80 area. That could be a nice little trade for you because the stop needs to be below 71.75. So we're talking about maybe 20 pip stop, 25 pip stop. If it works, we could be looking at 60, 70, even 80 pip profit. Now, what happens if we break below 71.70? Then the market could tumble as far as 71.10, 71.00, even 70.60. But I think we will find a bottom at some stage and the market will reverse and will start to establish a sideways range if I'm right about what's happening in the dollar index. Now, I've got to get a move on because I'm not going to get on the stock markets. We're already 17 minutes through this. The Euro-US dollar, I would not have known that the Euro-US dollar was going to turn if I hadn't been following the dollar index. This is my key point now. Look. Okay, so here's your daily chart for the euro. We bounced and we managed to make it to my second fib level. Let me just show you here. Right, this is what I want to show you. This is how I break down. I get questioned about my fibs all the time. How do you find your fib levels? So this is how I've broken down my fib levels for the euro. I've taken the swing high back from here a year ago, just to show you how it is a swing high. Okay, so the actual swing high was right in January of last year. Why did I not take that swing high? Well, the bounce, and this is so often the case, as a trend changes, you get a real strong bounce back, which doesn't quite test the previous peak, and that's when the move really starts. So because that's where the move really starts, that's why I've taken my fibs from there and not this peak, which is just slightly higher. Now, what I like to see is have the levels all tied in quite nicely. In other words, when we've got these little swing highs and swing lows, do they tie in nicely with the fib levels that I've got on my chart? And one thing I'm particularly looking for is a 61.8. I want to put another set of fib levels around the 61.8. So I'm looking for a bounce that's got close to or touched my 61.8% fib when I've already, from the original levels that I've taken from the swing high to the swing low. Now that has worked quite nicely. In fact, if I open this up, look how nicely it's worked, because we've got 3 peaks, only not even 50 pips from that 61.8% fib. So then I take a second set of fibs from there down to the swing low, and this gives me just a second set of levels. I don't use those second set of levels so much for entry points, but I do use them as targets. But I'll use the first set of fibs for entry points. Now, therefore, this level here was a target for the bounce. We did hold it. We did hold it initially. Then we broke through. Once we broke through, I knew we were going to, well, I thought we were going to 108.00, 108.20. Now, we didn't quite get there. We got to 107.86. So the market reversed because the dollar index had hit that support level and bounced bang on that 101.50, 101.25 area. And then, so that was when I knew that actually we're not going to get to 108.00. We're going to reverse. And again, second set of fibs, just like on the dollar index chart, gave us a support level at around 106.20. I think we got a 106.25. We did. So this is now my range for the week. 106.25.15 up to 107.80, 108.00. Trend line there also lending weight to that, to those fib levels, the confluence of fib levels there. On the hourly chart, let's have a quick look if there's any information there that I need to show you. Not really. In fact, more confusing if anything, because the moving averages are flattening out, and but the trend line here has held as well. So that trend line is probably worth putting on your chart. Right. I really want to push on. Don't want to go into. I'm not going to go into too much more detail there. Now, for your trade levels, if you're selling up at 107.80, 108.00, you need to stop above 108.20. If you're buying down at 106.25.15, you need to stop below 105.95. So if we break out of the range, then I assume that the euro could get back down towards the 104.00, 103.50 area. We break up through the range, we're going to 109.50. That's the first stop, but we can easily get to 110.50, 111.00. Okay, I'm not going to say any more on that. I need to move on. I want to quickly touch on the yen. I'm definitely going to run over 30 minutes, but if I've still got your attention, then that's good. You're getting value for money from me today. Right, the dollar yen has been on an incredible bull run from the beginning of 2021. So getting on for a year and a half now. As I zoom in here a little bit, you can see that we have the potential for a double top pattern. Now, I don't know if it'll be a double top pattern. I would have really, what I would have liked to have seen for that double top pattern was a test on Friday, maybe a little spike above 131.21, 131.21, 131.40, and a pullback, and then a lower close, some sort of negative candle. We didn't get that on the daily chart, and on the hourly chart, well, not much extra information there. So what's key to me is, for next week, this is the daily chart. I would have liked to have seen a negative candle on the daily chart, or even a negative candle on the weekly chart, which would have given me an idea that this is going to be a double top pattern. So watch for this week. If we open on Monday, we spike up and we close down on the day, that would indicate to me that this double top pattern has a high chance of forming. The double top pattern isn't confirmed until we break below 126.35, which is kind of the neckline to the double top. But the difference between that and trading head and shoulders patterns is that you can trade the double top. You can bet on the double top happening. In fact, I did that. I don't know if you saw me on Friday on the trading battle with Nick Leeson. It's on YouTube if you want to go and search for it. Now, I did a trade on the Euro Yen, just having a gamble on the fact that this could be a double top. Now, not the greatest gamble because we seem to have closed above the previous high. So I really need that to pull back. I've actually got the position on because my stop's at 140.50 just to give myself a little bit of leeway. But I have to say, the trade isn't looking very good after Friday's close. But if we do pull back, we get a red candle on Monday, then I'll be back in business with my trade. So back to the dollar yen. If you fancy gambling on that, the thing about trading double tops is this is the strategy that I use. Sell it as we approach the previous high, stop above it, sort of a 30-40 pip stop. Worth trying. 30-40 pip stops is worth it because if it does turn out to be a double top, you've got hundreds of points, hundreds of pips potential profit when the market collapses at least back to the first support level. Even if it doesn't turn out to be a double top and we bounce off the first support level, it probably will get there. So risking 30-40 pips to make 100, 200, 300, even 400 in this case will definitely be worth it. And the other thing is you can then quickly reverse. If you get a daily close above the previous high, it looks like that's a breakout. We're in a bull trend anyway. And then, so you can say to yourself, okay, we're in a bull trend. That's actually turned out to be a bull flag. We've beaten the previous high. We've closed above it. So now I'm happy because I can actually put a long position on. I'm trading in the direction of the trend. I can put a stop in. Well, I would put a stop in below 131.00. So I might be buying it at 131.50. Stop in just below 131.00. I feel confident. We've beaten the previous high. I'm trading in the direction of the prevailing trend. And then again, you could still have 100, 200, 300, 400 even pip potential profit on that. So I'm quite prepared to lose a bit on the first trade if I'm wrong about the double top, because I'll then feel more confident about jumping into a long position on the break. And actually, just having that short position on really focuses your mind on this particular trade, on this particular market. It's something else I like to do. If I see an opportunity, I might just put a small position on, just maybe even just 25% of what I'm looking to do, rather than the whole lot in one go, just to focus my mind and have me looking at that price action. When you've got a little position on, it tends to focus your mind far more on that than if you didn't. You might then wander off and look at another opportunity. So I like to just do that, and then I'll keep looking back at the position and keep looking back at the chart. Okay, trying to throw some tips in for you as I go along. I do want to try to limit this to 30 minutes, so I'm going to move on to the S&P, to the stock markets now. On the daily chart, we have... I'm just going to put that line in already, actually. Okay, so here we go, weekly chart. Now, this has been a really good market to trade, actually. A really good market to trade. There is your bull run from the COVID crash, if you want to call it. We crashed down to 21.74 and then absolutely rocketed up to 48.00, 48.08 in fact, on all that QE, on all that crazy money printing we've had. We've seen the stock markets trend lower with all the developments that have been going on that I talked about earlier. Now, let's zoom in. Actually, no, let's zoom out. Look how beautifully the fibs worked. Now, I've got a longer term fib there. Let me just show you that longer term fib. That it is important and it is worth looking at. This is why you've got to go back. Remember I talked about earlier, you've got to look at your weekly chart, and I'm looking at my monthly chart here. Why am I going all the way back to 2009? This is the global financial crisis crash low, 666 or just below it. Why am I bothering to go back? What's that? It's almost 15 years. I'm going back 14 years or something. Why am I doing that? Oops. Why am I not showing my chart properly? Why am I doing that? What information could I possibly need to know going back that far if I'm a day trader who's really just looking at running positions for a couple of days maximum, or even a couple of hours maximum? Even if you're just scalping the markets and you're only running positions for a couple of hours, you need to look at the monthly chart. And here's a perfect example of why. Look at this. 23.6% fib has a value of 38.30, taking the swing low from the global financial crisis low of 666 up to the peak of the bull market at 48.08. It gives us a value of 38.30, 23.6% fib. Right, why is that important? Here's the correction low. I'm not going to call it a crash low. Here's the correction low that we've seen for this year from 48.08. What value does it have? 43.03. That is 27 points, less than 1% out from 38.30. Incredible support level. Now again, I broke down my fibs as I showed you before. I took these fibs were just beautiful. The COVID crash low was at 21.74. That is very, very close to 22.48, just a little bit below there. It's about 3% lower than there, but fair enough. And then the market rocketed. So I've taken a second set of fibs there, and look, Fibonacci levels, and look where that has taken me. Open this up. That gives me a 38.2% fib of 38.02. What was that correction low? 38.07. So that's bang in between 38.30 and 38.02. That is why we bounced so aggressively off there, and that is why I told my subscribers that that would be the low for the correction at this stage, and we could expect a bounce. And I stated that 2 weeks ago, and it's bang on. Right. So that's just a quick lesson in why you've got to look so far ahead. Back to the weekly chart. It was confusing at first. We broke the 100-week moving average, and to me that was like, wow, that's catastrophic to break the 100-week moving average. But you know, it just had to happen where we bounced off that fib level. Now, where are we now? Look now, again, look how beautifully the fib levels have worked. These are longer term fib levels. These I have got from crash lows going back to 2009 and the beginning of 2020 with that COVID crash low. And these levels are still valid, even though they're very, very long term. 41.86, 41.87. That was my target for the bounce. What was last week's high? 42.02. Okay, we overran it by 15 points. It's nothing in the S&P. So this is the range that I think we've established now, and I think we're going to hold that range. Now, if we're really lucky, we'll get to trade that. What is it? Well, it's almost 300 points, isn't it? It's almost 400 points. Let's call it 350 point range. It could happen that we hold that 350 point range throughout the summer. So selling up around the 4200 area could work really well on a dip back to the 100-week moving average. Now, the 100-week moving average is still a factor. Even though we plunged below it and we recovered above it, it's still a factor. It's still something you've got to watch. The first time we dipped towards it, we held. Now, we found support there this week at 40.70. For me, actually, the real support level for the S&P was down at 40.50, but we didn't quite get there. It was a 100-week moving average that held it. For my subscribers, I had us buying down at 40.50, 40.40, but it didn't quite get there. This is the hourly chart, which is a bit of a mess. Okay, I'm not going to break it down anymore. Going forward, those are the big levels that you need to look at. 40.50, 40.40 is actually a good level on the short-term charts as well. So it's really only a break below 40.30 that would see the market start to tumble again. Okay, and then obviously a break above 4,200. Now, I think if we're going to break anywhere, I actually think there's so many, everyone's so bearish now. When I was getting bearish at the beginning of the year, going through Twitter, social media, not that many people were talking about the markets collapsing. Now everyone's talking about the markets collapsing. Everyone can see that inflation's out of control. Everyone can see that we need a recession. Everyone can see that interest rates are going to have to go up higher than they should have originally needed to do. And I think because of that, I think we're actually going to break higher, squeeze out some of the shorts, and then tumble maybe around August. That's where I think is going to happen. But definitely 4,200 is a big level. Now, if we get up through there, we're looking at 4,240, probably 4,300. When you look at the daily chart, 4,300 looks like a reasonable target. That's the weekly chart, not the daily chart. Okay, I'm waffling on so much that I've already gone over my 30 limit time. So I'm going to start to wind it up now. But definitely 4,250, 4,300 looks like a reasonable target. That, I think, would be a great selling opportunity. And I can put some fibs on here to show you why. In fact, I'm going to take all of this off, delete all my trend lines there, proper tidy this up, take the Fibonacci retracement from the all-time high down to the crash low. Now look, there's the fib levels, and look how beautifully they all tie in. I love the way the 500-day moving average is now tying in with 40, 50. That's why I think that's a good support level. But don't forget the 100-week moving average proved to be the better support this week. This is why 41.90, 4200 is a resistance level. We start breaking up above there. We're going to hit the 50-day moving average, which is around 42.45, and I think we can get up to the 50% fib, which is at 4,300. We're going to meet the 100-day moving average there. We're going to meet a trend line there, if I remember correctly, not that one. That one, okay, actually that's a little bit lower than I thought it would be. But that definitely would be, I could actually put second set of fibs on here, possibly, could I? Not really. No, that's not really tying in with what I want. Actually, these fibs are kind of working. Look, this 41.20 area is tying in with these swing lows. But anyway, I'm going to examine that on the YouTube channel and do that if we get up to 4,300. I think this is just a bounce in a bear trend. I do think we will eventually break lower, but I think that this recovery will sustain itself for longer than a lot of people think, and they'll give up on their shorts, or they'll get squeezed out of their shorts, and then towards the end of the summer, market will come crashing down again. And I do think we will eventually break that 3,800 area. Okay, said enough. Now, here's the bit where I give you some special offers and plug what I do. Firstly, here's the free stuff. I've just started a blog. So daytradeideas.co.uk is my website if you weren't already aware of that, /blog, or just go to the menu and it's there, Jason's blog on my website. I'm trying to make this a combination of analysis, so I will update and give you some free trade ideas. Basically, this is the same stuff that I give to my subscribers, but I'll put it on here for free for anyone who's not subscribing. There you go, Thursday, June the 2nd. I had some Forex trade ideas and signals. I also put my YouTube video on there, so do visit that regularly. I'm going to actually develop the website and have a little box here where you can sign up, and then you get notifications when there is some new entry to my blog. And then I've got lots of educational stuff as well. For example, if you're new to trading, I've got an introduction to Forex trading, giving you a real basic idea of how the spreads work. Just lots of interesting stuff there. I've also got an introduction to trading support and resistance. I've just posted that this morning actually. I'll put stuff about my free stuff, my webinars that I'm holding. I'll also put that on the blog. And then I'll do articles like this, 18 reasons why you must use stop loss orders. This is something that I built up over 34 years of trading. Everything that I've done wrong, I learned by trial and error. No one was there to teach me really. In the 90s, the internet didn't even exist. So it's not like I could have gone to the internet and found the free stuff that you can get these days. So everything that I've learned, I'm going to start to post it on the blog. I'm going to start to give it away in ebooks. I'm going to start doing promotions for you guys. So please do be a regular visitor to my blog. And as soon as I get that little registration box up there, sign up and you'll get notifications when I post stuff. My YouTube channel is youtube.com daytradeideas. Have a look. I post videos up there regularly. I often release stuff that I've given to my subscribers. I release it a few hours later or a day or two later. There are always trade ideas in there. Good ones. They really do work. So have a look there. I've been building that up actually. I'm quite pleased with that one. My website, daytradeideas.co.uk, I've just shown you on the menu what I've got. There you can subscribe there to various reports. What else do I need to show you? My day trading course. Now, this is where the offer comes in. My day trading course is really popular. If you like what I do, if you want to learn my technical analysis, if you want to understand how I trade, how I enter orders, exit orders, how I manage the trade, how I manage the account, how I risk manage, everything is in there. Everything I've ever learned is in there. A few years ago, my subscriber said to me, look, it's great subscribing to what you do and we do make money, but we actually want to learn while we do it. So I wrote this course. It took me a year. I've had loads of positive feedback. No one's ever asked for their money back. Honestly, it's really good. $3.99 is a bargain. But today, I'm going to give it to you I'm going to take 80% off this. This is because I'm just starting webinars, just started my blog. I've just started doing a load of new social media stuff, and I want to kind of celebrate that with an offer. So I'm going to take 80% off of this and offer it to you at £79. Now you should get an offer if I've set this all up correctly in the webinar. On technology, I'm absolutely hopeless. So let's hope I have set this up properly. You should get an offer to get 80% off this course, £79. There's a load of free stuff thrown in there with it. I'm going to send you, if you sign up for this, every week, for 9 weeks, you're going to get a link sent to the next video. It'll probably take you a week to get through it because you'll need to watch it 2 or 3 times. There's a lot of information in there. At the end of the week, you can book a session with me, 15 minutes or more, whatever you need, 30 minutes. Jason, I need to talk to you about this. I don't understand that. Can you explain this? How do I do this? We'll run through it. It'll be a private session for you for as long as you need at the end of every module. So you'll get 9 sessions with me if you need them. That's not the end of it. When you start trading then, or if you're continuing trading, you run into problems, you need another session, whether it's a week later, a month later, a year later, it doesn't matter. You contact me, say, Jace, you know, I did the course, it's been a year now, I've run into some more problems, I need some more help, can you help me? I'm there for you basically. For 80 quid, you've got me for life whenever you need me. So I think it's a phenomenal deal. I mean, I would normally charge 80 quid for one mentoring session. So I'm trying to give away some bargains. I'm trying to help guys to learn, or if you really need to brush up, if you're struggling to make money consistently, this is where you can go, and this is where you can get some great help. Now, if you're still not sure and you want to have a chat with me first, I'm also going to offer you the chance for a 15-minute session with me to have a chat. Maybe ask me about the other services that I give. I give daily technical analysis, signals, trade ideas. You're probably aware of that anyway. If you want to ask me about that, if you want a free trial of it, maybe you can contact me. So you should get another offer with a link, so you can go and book yourself a 15-minute appointment to chat to me. So we can chat about anything you want. If you want to chat to me a bit about technical analysis, about some trading problems that you've got, or about the products that we have, which of course I'm going to try to sell to you, I'll be honest. But the session is free. I'm only giving it away on this webinar, so grab that as well. That's pretty much it. Now, if you want to contact me, especially if I've messed up the offers on the webinar, I'll email them again if I have messed it up. But if you do want to contact me, go to the website, contact us page. You'll get my WhatsApp number, my Skype, my email. You can fill in the contact us form and I'll get back to you. I'm here to help. So please do reach out to me. Right, hope that's helpful. And give me a shout with any questions that you have. And I'll do this again. I'll try and do another webinar next week. If I don't have time, we'll do one the week after. Thanks so much.